broadly, the drivers of M&A have kind of been consistent because organic growth, when you look at it globally, is good but not great. And so people continue to say, let me use M&A as a tool to drive growth. However, whether that's Brexit or general regulatory uncertainty as to if I announce a deal, will it close or not, does give pause to people. And that has been a bit more of an impact in EMEA and APAC rather than in the US. So in the US, investors continue to like growth, continue to like deals. And another big theme has also been this relentless focus on corporate clarity. 40% of the deal volume in North America has come from corporate clarity transactions. You mentioned GE Danaher, Dow DuPont, Eli Lilly. So there's been a lot of these transactions, which has just been about focus on your core and spin, split, divest, whatever is non-core.
Is this kind of pace of deal making sustainable into Q2?
I think it is, but the mix in terms may be different in terms of mega deals versus smaller deals, but the drivers of continuing to need growth, and you add on top of that, the end markets are getting disrupted. Sometimes it's by technology, and so you've seen some of these fintech deals happen because you have disruption in the end market, technology driven or customer trends driven, and that's here to stay. And so companies do have to think about looking at their strategic toolkit and using M&A to and sometimes defend and sometimes be on the offensive.
What's preventing more cross-border M&A? Is that just another sort of repeat of the factors you said for why there hasn't been that much Eurozone or APAC M&A?
Largely, yes, because you want to, for M&A markets, you can deal with volatility, but you kind of need some level of certainty. And I think Brexit, as well as the regulatory framework, has had an impact on that. But you tell me if your countrymen make the right decision.
I wish I could.
Maybe
tell
it's
you.
optimistic.
I wish I could.
So where should we be looking for deals in the US? Are there certain sectors or types of companies that are more ripe?
So technology and healthcare continue to be active. I'd say the fourth most active sector in the first quarter was financial institutions. So whether that's fintech or banks, I think both have been interesting for different reasons. Because last year, if you look at all the bank deals that got announced, most of them were structured as acquisitions. And the market actually reacted negatively to pretty much all the deals last year in the bank sector. This year, you've had one big one, the BB&T SunTrust one, another mid-market one, TCF Chemical, and both were structured as merger of equals using stock, and the market seems to have liked them.